Welcome to the Corporate Treasury 101 podcast. I'm Hussam.
And I'm Guillaume. In this podcast, we are going through the fundamental concepts of corporate treasury, which I learned from my experience working at a Big Four consulting company.
And he'll explain it in a way that someone like me who knows nothing about the topic can understand.
We hope you enjoy the episode.
So, Guillaume, we're going through the basics of corporate treasury, right? We're going through your 4 pillars that you've defined for us, which is cash and liquidity management, which you said was the availability of your cash, corporate finance, which is your funding and investments, and how you fund and how you invest, financial risk management, which you mentioned were the interest rate risks and the exchange rate risks, and how external factors can affect your treasury system and how you need to hedge against those. And we're really excited for you to take us through the 4th topic in your overview of corporate treasury, which is bank relationships. Can you explain banking relationships to us, please?
Absolutely. Hussam, first of all, I must say I'm thrilled that you're that much excited about corporate treasury. We just went through a big piece into corporate treasury. I admit that I kept the easiest part for the end, but also a part that can only be explained after everything we went through already. So, banking relationship. This is one, again, most important function of a group treasurer, of a corporate treasurer. Why? So all the topics we just talked about, banks are involved at a certain degree, right? So typically, we can say that banks are in the business of making money by selling money or by lending money. In cash management, you need basically a bank account, right? To receive money from your customers and to make payment to your suppliers. Well, guess who is providing this kind of services? Banks. For liquidity management, it might be that I need to use a credit line, right? That I can use now and then to fund some part of my business. Again, credit lines are provided by banks. When it comes to funding, I might need a loan to fund a new factory, for instance, the example we had earlier. Again here, banks are providing this kind of products. Investments is the same. So for investment, it's a bit particular, but on the market, there are very few entities that are able to invest money on the market, and banks are one of them. So the most common counterparty to deal with for investments are banks. Financial risk management. Well, we said earlier that you want to hedge your risk, right? So you need hedging products. Again, banks provide this kind of products. What I want to say in a nutshell is that banks are critical partners of a corporate treasurer and of companies in general, right? And you need to manage the relationship correctly with the banks because you eventually have several ones. You want to make sure you have good funding projects, good projects in general for your company in order to be financially successful. And you also want to make sure that all those projects don't cost you too much money, right? So what I want to say in a nutshell is that banks are critical partners of a corporate treasurer. You need to manage the relationship with them because they are really important for your financial state. And you can actually have several banking partners. And of course, you want to make sure that all those financial products you're using in order to drive your business don't cost you too much money, nor to the company. This is, in a nutshell, why banks are super important for a corporate treasurer and why it's a big part of a daily business of a corporate treasurer.
So that kind of ties in the first 3, like you took us through really well in the examples.
Exactly.
They're the ones that enable your liquidity management, your
funding, investment,
your corporate finance, and your financial risk, because they're the ones that apply the instruments to help enable that.
Exactly. Yeah, absolutely.
You got to keep your banks happy.
You'd rather do that, indeed. But you also want to make sure they don't bill you too much, right? Because banks tend to go this way sometimes, indeed. Yeah.
Okay. Guillaume, thank you very much. That was a very good overview.
Thank you, Sam, for being such a good student. You summarized quite well all the topics we just tackled. I hope it was clear for you and for everybody who might listen to this podcast. Again, we're gonna go through all those topics in more details in the coming episodes, by all means. But this idea the idea of this episode was to keep it high level and explain overall for people to have an overall understanding of the topic.
Thank you very much.
Thank you.